Hi there, welcome to FinFactor. I'm your host, Blaine Bertsch, co-founder and CEO at Dry Run Financial Modeling Software, where we help the office of the CFO leave spreadsheets behind and model everything from cash flow through to complex scenarios with clarity and control. And joining me today is Ben Taylor of SoftLedger, a cloud-based accounting platform that offers real-time financial reporting and multi-entity consolidation. Today, we'll explore some of the challenges and avenues for dealing with complex multi-entity organizations. Welcome to the show, Ben.
Thanks, Blaine, for having me on.
So I know we were talking just a couple of weeks ago, and we were talking about like SoftLedger, and you're obviously an expert in multi-entity organizations and how you deal with the accounting, because that's a challenge. That's a real challenge out there that we hear often. And most of the time when we hear about a business moving up from their kind of first accounting system that they've been introduced to, moving up to something bigger or more capable, I suppose, it's often because of multi-entity. So yeah, I wanted to dive into that a little bit. And what are some of the challenges that businesses face right off the hop when they have more than one entity?
Sure. Yeah. Something we deal with all the time is companies outgrowing their small business accounting system, often QuickBooks, where they might have 10 different QuickBooks instances and they need to do something manual to consolidate that. That may be exporting to Excel. It's often exporting to Excel. Maybe it's using another system, but regardless, even if there's another system involved, something changes in one of the entities and then you have to re-export and re-import. So it's just this manual process that introduces some friction and steps that could have errors, and it takes longer, and there's a whole host of problems that come with that. So when that pain becomes enough, that's generally when customers will reach out to us.
So I imagine there's a bit of I don't know, I shouldn't say a breaking point, but I imagine going from one entity to two is, okay, it's a thing. But is there a point where you find that organizations start to go, okay, this is getting a little bit out of hand? Is it at number two, or is it a little further up where it starts to really, really cause them pain?
It really depends. I mean, I think it could be, just we have customers with 3 entities that have enough operations in both of the subsidiaries and real reporting requirements at the parent that's the pain is enough to move over at that point. Certainly if you're up to 8, 10 entities, 15, 20, then the pains becomes a lot clearer. And that's even the case for some of those. They can go a little bit longer with more entities if a couple of the entities are just a property or it's just a holding company and there's not that much going on. But at some point, even if those entities only have a handful of transactions each month, it does get to be a pain simply in the consolidation.
And so what I'm assuming I already know this, but what are all of the sort of most common reporting requirements that the businesses need? Is there anything that's a little bit different for multi-entity businesses than sort of the single?
Yeah, I mean, you need for multi-entity businesses, you need the consolidated view of your organizational structure, and then you need to report on the subsidiaries separately. And that could be as simple as that, or it could be your subsidiaries in another country. It's in another functional currency. There's a IFRS reporting requirement versus a GAAP reporting requirement, and you have you're paying on behalf of your subsidiaries out of the management company, and so there's a whole host of considerations that come with that. So depends, but there can be a lot of different reporting requirements.
You just mentioned something that I think like we've seen, because of course when we're helping businesses forecast forward, either their cash flow, most of the time it's cash flow, but oftentimes they're also forecasting other revenue and other profit scenarios and things. But we also see them basically going, okay, we need to move money in between organizations and trying to figure out how the timing is and how that all plays out. Is that also something that is kind of an issue? And how do companies deal with that before they get to a solution like yours?
Yeah, that's a huge issue is cash management between these multiple entities. And it's kind of a trade-off between, I think some of it you're doing either way. It's just about how automated you can see all of that together. But you decide, okay, yeah, you open up a new entity, and do you open up a bank account at that entity? Do you still run everything out of another entity and just move everything around in using intercompany entries, and you just transfer cash, and then you need to book a receivable and payable accordingly? It's a that it just depends. But if you don't have a system that manages all that effectively, then you may just default to opening up accounts in each entity because you don't, otherwise you're not going to be able to track it properly, and without a good control environment, you may have to make different decisions than you would if you knew that you could actually just pay everything out of the parent and then just use intercompany entries to push everything down. So we'll see that once you move to a system that consolidates all your entities in one, you are able to make some different decisions.
And you mentioned like FX issues when you have like multi-currency as well. What are some of the biggest challenges on reporting and forecasting and everything else when you're dealing with multiple currencies?
Yes, it's just there's a lot of things that come up. I mean, there are, you hold cash in different currencies in a different country, and then you get and this is often more difficult outside of the US because in Europe, for instance, there's a lot more multi-currency invoicing between vendors and having different functional reporting requirements within the same structure. And that just introduces a lot of decision points, where you're getting invoiced in euros, but you're reporting in pounds, and then you're rolling up to a USD reporting entity. There's just a bunch of different scenarios that come up that can introduce different kinds of complexity, and so it's really varied. I mean, it could be as simple as paying a foreign currency invoice, or it could be more that you have a functional reporting currency at the subsidiary level that's different at the parent, and you have to worry about translation between the two. So yeah, that's probably the trickiest thing that's come up over the years, is just dealing with all of the different nuances that can come up with foreign currencies.
And I'm not an accountant, so I'm coming from a little bit different side here, but I imagine that if you actually have, let's say, 4 or 5 different accounting files and multiple currencies, and you're moving money, there's got to be a whole lot of entries going back and forth that are getting a little complicated, I guess.
Yep, exactly. And there's other things like, the foreign currency fluctuations at the subsidiary reflected at the parent. You start getting these like non-real movements that aren't really operating losses or gains, but they need to be reflected in order to recognize everything properly in consolidation. So that's when you hear about translation. A lot of that is to capture that sort of thing.
Yeah. So I kind of want to get into, I think the real big pinch point for businesses. So they likely have recognized, okay, we've got a real challenge here. We're in, we've got 3, 4, 5 QuickBooks files, or sometimes we got 3 QuickBooks files and a zero file and something in a spreadsheet, and hey, simply accounting or whatever, right? Like there's always, we've heard some pretty interesting mixes of tools like that. So they may recognize, okay, yeah, this is getting really, really painful. What are some of the steps that they need to go through to be able to go, okay, I need a new tool here. What are the steps to go through to make something like that successful, to kind of vet it out and plan it out and actually make a transition to a new tool like that?
It's a great question. There definitely is a situation where you only have a few entities and you're in your small business accounting system, and you have an add-on and that works, and that's simple and it doesn't take that long. Maybe that's okay. I think, when it gets to the point of you're just spending so long on the consolidation process, that's where it starts to be, you might want to consider a change. And when you do that, think about time. It's all about time savings and really how fast you get the financials out the other end. So if that's only taking an hour and that's acceptable, fine. But if it's taking a day or two, then use that as your evaluation. So how long would it take me to do this in this new tool? That's really, anything else is kind of missing the point. Like that's ultimately, we want to show that, that it's going to be less time. The ultimate goal of the finance and accounting department is just to give the business the critical financial data it needs to make informed decisions, decide what to do next.
So if they get to that point and they go, yeah, no, I'm in the 2-day bucket. What what steps to kind of move to a new system? Like what are some of the, I guess, where do businesses struggle the most? What are some of the real friction points and things that like you might want to need to know this before you take a leap into jumping into something new?
Sure. Yeah. So often we'll start off with the first picture of how everything comes together is this diagram of variable ownership structures and how that all feeds into ultimately what the reporting will be. And I think that you need to be cognizant going in that you can have your hub and spoke model of all your different entities and not fully own all of them, and think that there's some there's that view, but then ultimately you need to see everything as part of the consolidated organization for anything that meets the criteria for consolidation. If you own 60% of something, you're going to an entity, you're probably going to keep it all in that consolidated structure. So just go in with that lens as well, is just think of okay, everything's got to roll to one entity. What does that look like? And then if you go in there, then it starts to wrap your head around like, what does this need to look like if it's all part of one system? And if there's some entity that's just sitting in a spreadsheet somewhere and not in a system, bring it all in. So, like, think about what would all look like together as you get prepared for that process. And that should be plenty for whoever you're going to go with to start pointing you in the right direction and showing you what that would ultimately look like together.
So yeah, and I guess that's sort of that next step is starting to say, okay, let's, and I know of course you guys have a great solution, but if they're starting to go, okay, I want to look at what my options are. What are some of the things that they should be like looking for? I know, like, outside of that little bit of a plan, is there anything they should be looking for to say, okay, I get from A to Z to something successful?
Right. You just think about all the edge cases. start there with the complex ones, the intercompany entries. What are the different types of intercompany entries? We mentioned like the paying on behalf of a subsidiary, also movement of cash. Those are different scenarios with different considerations for, like, I'll give an example. Like, you eliminate a lot of things in consolidation, but if you're moving cash between two entities, well, that cash actually moves. So you don't want to eliminate that. You just want to eliminate the pieces that are really intercompany movements. So it's best to like run through the most complex examples and just make sure you kind of understand how those will be reflected in the ultimate solution.
Yeah. So someone comes to you and says, okay, we've got this list of needs. We've looked at the edge cases. That's a great tip, actually. Get all the edge cases out first. The other ones probably are fairly straightforward. What is that next step? Where have you seen a transition? Because virtually, I imagine almost everyone coming to you is coming from another system. Where have you seen some of the trickiest parts? Is it like on the technical side? Is it on the getting buy-in from your team? Like, what are some of the tricky parts that if they plan for it first and they know about it, it'll probably go smoother?
The bigger the team, the more change management you have to address. I think the consolidation itself is often, from a change management perspective, it's probably only a couple, one or two people that are really, really in deep doing that. So if there's a lot of operational activity in each of the entities, getting buy-in there, that's really where the biggest change will be, is if you have a couple operating companies and there's a lot of accounts payable flowing through and there's a defined process, then you might need to think about, okay, how do we automate that, in conjunction with making this switch. So there's some, just normal general ledger platform switching considerations as well.
So you mentioned that, like, oftentimes there's like one or two people that actually take the lead on the technical side, like on the actual switch, and then it goes into that getting the buy-in and everything. Um,
Mm,
any sort of thoughts or tips on what works best there? Who do you assign? What kind of
mm,
do you tend to see things that work a little bit better? How much responsibility do you give them? Like I'm just guessing here,
right.
what might be some of the things that would make it a
Sure.
little more friction or a little less, right?
So our approach is like we like we want to present a path that gets them to realize value from the product and take it over as quickly as possible. And so um, we like to make everything self-service if they wanted, if our customers want that, and we guide them along the way if they want a little bit more handholding. And so um, so yeah, it really depends on them. We have a series of calls that we have that are structured, that we go through a process, average like 30-45 days, where we guide them through the data mapping, the structure, all that, and so they can ask questions and kind of like think through it themselves. But the goal ultimately, and I think that this makes a lot of sense, especially for small teams that are going through this process, is to try to, as quickly as possible, get to the point where you are self-sufficient and can use it ongoing, and you're not beholden to a consultant that's got to be involved in every step along the way. I mean, some of this stuff is tricky for sure, and you can tap people for the more technical pieces, but I think the goal should be self-sufficiency.
Yeah. So someone, taking ownership and taking lead and understanding uh,
Mm.
what needs to be done to get them as successful as possible, as quickly as possible. It sounds like.
Exactly. Yeah. And a lot of, client advisory services, sometimes called managed services or outsourced accounting, like those type groups can be really helpful here too. So this person that's leading the charge could actually be an outsourced controller, outsourced manager along the way. And that might be a good decision, especially for smaller organizations where you don't have an expert on intercompany entries and eliminations, and forget like the cumulative translation adjustment for foreign currencies. Like these are tricky subjects, and so leaning on an accounting firm partner could be a smart move for a lot of firms.
Yeah, that makes a lot of sense, especially when a lot of small businesses unlikely to have that expert sitting there. But I imagine somebody there can be trained to do the day to day. But to do a
Mhm.
transition like this is a much bigger lift, and likely uh, time is always a challenge, right? With sort of
Yep.
everybody.
Yep. Always.
So, is there any other like challenges or things that you see with making that transition or getting
Mm.
started with a multi-entity? Like, what any like top three danger points they should keep an eye out for, or is it pretty straightforward?
Uh, well, it's definitely not straightforward. There are some multi-entity consolidation is complicated, and I'd caution against just you know just jumping in and not vetting the solution and making sure that all those, again, like I said, all those edge cases, if you could say, oh yeah, multi-entity, we got that down, but when it comes to these things, especially if you have foreign currencies, especially if you have a lot of entities, if you have certain reporting requirements, you're doing a lot of intercompany transactions, really going through and like proving this will work in this way at a like a precise level of detail. Because if it starts to fall down and like, let's say it can do all the things and combining all your transactions, but really on foreign currency and intercompany, it doesn't quite get there. Then if you don't get there, then you're going to be doing something outside of the system, and that's will end up defeating the purpose of bringing on this new tool.
Yeah, and I can see that would be really frustrating because you could put a lot of time, a lot of money, a lot of energy, and train everybody up, and then find out we missed a
Mhm.
gap, and likely
Yeah.
they're sticking with it, and they're going to live with a gap for a long time.
Exactly. Yeah. And this is a lot of the reason why it's tough to sell to accountants. We're, CPA by my background, like we've been burned before. It's like you don't know sometimes until you're 85-90% of the way in. These things won't work, so it will not work. And the devil's in the details, and you can't flub a lot of this stuff.
Yeah, yeah, and I think that's the the absolute like moral of the story. Edge case and details. And when you
Hmm.
mentioned that at first, I was like, because I was not thinking you were going to say that. And you said edge case. And I'm like, well, that makes a lot of sense because you just, you go straight to the issues and then you can vet properly and you just
Hmm.
know that you're not going to get a nasty surprise at the end.
Exactly. Yep.
Is there anything to, or any thought that you guys put into or in those edge cases of sort of the future proofing, or is that just pretty hard to predict?
No, I mean, I like every time the way we think about new features, and I think this is another thing to kind of watch through. It's tough to say exactly how you how you evaluate this in particular, but you want to make sure that there's always, it may not be the push button solution out of the box that you could wave a magic wand and want, but make sure that you can always kind of cover every eventuality. There's always a way to fix something, even if it's a little bit more manual than you want, even if there's always a way to cover everything that could come up, because you don't know what's going to happen with your business 2 years from now. You could not be in real estate at all and all of a sudden decide to buy a few multifamily properties. You need to be able to make sure that you can cover that ultimately. And that's, if you do that, then you know that at least like this isn't going to fall down over time. But if you try to like automate every single thing to a T, if something changes, sometimes that's not, if you don't have a malleable solution, you may not be able to capture that.
Yeah. And I think when you said if something changes, no longer applies for the last like 5 years, it's when something changes. Because it's just
more, yeah.
That's just the nature of the business world over the last number of years is change is the norm, right? So it can make it even
Right.
a bigger challenge.
Right. Or even like the past, couple of weeks, everyone's got to be nimble now. Yeah.
It's totally true. It changes almost by the hour these days. So
Yep.
it's like being up here in Alberta, they always say if you don't like the weather, just wait a minute. It changes
Yep.
so fast. Well, this has been great, Ben. This has been some really good tips, and honestly, like the advice on just how you document and understand those edge cases and maybe go to an outsourced person to help bring them in and dedicate the proper time to it. I think it's such valuable advice for moving to something that would be a multi-entity solution. Tell me a little bit about SoftLedger and how people can get hold of you if they want to check you out and should be adding you to the vendor list for sure to come and talk to. How do they find you?
Sure. Yeah. Thanks again for having me on. We help organizations manage multiple entities as easily as possible and consolidate their financials. We're easy to find. SoftLedger.com. You can look us up. Email me directly at ban@softledger.com, and let us know if we can help.
Yeah, thanks so much, Ben. That was terrific. I really appreciate all the insight you've offered, and I want to say to all of you out there as well, if you do have a challenge of understanding where you're headed, especially with your cash flow, but also you need to model like today. Everything changes so fast. You might need to model just about anything under the sun. Come talk with us because we're actually really good at that. If it's financial, we can model it for you and help you understand exactly where your business is headed. Just come visit us at dryrun.com.